Ladies and gentlemen, good day and welcome to eMudhra Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Venkatraman Srinivasan, Executive Chairman of eMudhra Limited. Thank you, and over to you, sir.
Thank you. Good evening to all of you, and welcome all of you to this earnings presentation for Q4 and FY 2023. So, little bit I will trace the origin and where we are today, and then go to the financials. Then later on, Mr. Saji, our CFO, will go through the cash flow statement, profit and loss and balance sheet, and then about the technology and various aspects and future strategy. Kaushik will present. So, come to where we are today. We have become a one-stop shop solution provider in the securing enterprise transition to zero trust. So, in this, what is zero trust? Now, zero trust is emerging as a major thing around the world. And then zero trust has become a necessity because of the interconnected global world, where not only people, the devices, the internet and so many things are interlinked. And when so many things are interlinked around the world, the cyber security is very important. And then again, for efficiency and cost reduction and all those purposes, digital transformation is very important. So we are in the digital transformation and cyber security solution provider. With that, we also combine the trust service providers so that we are a one-stop. We have become a one-stop shop. So that is our theme in which we operate, and we will continue to operate. The important things are: one, we have marquee customers, 19 out of top 20 ET500 customers, and several large banks, large e-commerce, pharma companies, and automotive companies are our customers. Then mature technology solutions and intellectual property. So all our solutions are used by very big banks, big government agencies, and then they are all mature over the last several years. And we are very focused on innovation. So we have more than 250 people on the R&D itself, and continuously do R&D on the digital transformation and cyber security. Then global IT research like Gartner, IDC, then Frost & Sullivan, all of these have recognized that in several of their reports we have been featured. Then thought leadership, quality and security. So we are a board member of the Cloud Signature Consortium. I am the chairman of Asia PKI Forum. Then we have several quality accreditation and certifications, especially EAL4, which is a very important certification for the cyber security, and also we are in CMMI level 5 certification. And we continue to be the largest certifying authority in India. So coming to the zero trust is the new security paradigm. Never trust anything, but always verify. So never trust and always verify. That is the paradigm. That is where the world is evolving now. So the digital trust and traceability is becoming a critical factor in electronic document exchange. Only technology that can replace wet signature, provide legal non-repudiation, identity traceability, and non-tamperability is digital signature and based on the PKI infrastructure. When the cyber threats are forcing enterprises to secure their network, sensitive use cases are rapidly adopting digital certificate-based authentication to secure their infrastructure. And again, another important thing is the data privacy. All around the world, it has become very important. It is forcing enterprises to leverage cryptographic key to encrypt sensitive data. So both data at rest and data at motion, everything to be encrypted. That is also very important. So in this, where does eMudhra fit in? So eMudhra has solutions for most of these components. So now if you see, we have authentication solution, which can authenticate users and applications. We have encryption solutions for websites, servers, everything. And then we have signing solutions, which is the mSigner solution. Then we issue digital signatures, and those digital signatures are issued based on the cryptographic key. So that way we have comprehensive solution towards the zero trust, mSigner solution, eMudhra solution. And again, mDiscovery is our recent solution, where the certificate lifecycle management, including discovery, we provide a solution. Then CA solution we always have for the last 4-5 years. And you can, from this presentation, you can click on the link so that you can more understand about the cryptographic keys and the digital signature. Then we have global recognition, we have strong partnership, we have driving thought leadership. And global accreditation, IDC has accredited us as first in the identity and digital trust category. Gartner again recognized in Gartner e-signature guide as a global full service enterprise solution vendor. Then DSC Technology have again InsurTech and People Choice Award has been given to us. Then in CIO 20 most promising tech solution provider we are featured in. And we have a lot of technology partnership, SAP, Sage, then Infosys, then TCS Banks, then DSC Technology, then Thales, Utimaco. So with all of them, we have technology partnerships. Similarly, we have reseller partnership with several large companies like TCS, Infosys, Tech Mahindra, LTA, and several others. Then global membership, we are a member of Cloud Signature Consortium, member of Asia PKI Consortium, member of FIDO Alliance, member of CA Browser Forum. Then we have AATL accreditation and Web Trust accreditation and SAFE accreditation. Then quality security certification, again, we have several ISO certification. We have HIPAA certification, CMMI level 5 certification, and many other certifications which are necessary for this industry. So coming to the financial performance, our growth has been very good in the last year. So last year we achieved 38.3% year-on-year growth, and we touched 254.1 crore of total income. Then the EBITDA, again, we got an EBITDA of 92.6 crore, achieved a 36% year-on-year growth, and the EBITDA margin also continued to be good, 36.5% margin. And coming to EBIT, we achieved 76.8 crore, so which is a 13.5% growth year-on-year, and EBIT margin was 30.2%. In net profit, we achieved a good net profit of 61.2 crore, and which is again 48.8% year-on-year growth and margin at 24.1% margin. Then adjusted net profit, because in this net profit some amount of ESOP provisions are made. So if ESOP provisions are adjusted, as we had explained earlier, ESOP has been fully, entire shares have been transferred to the trust, and there is no dilution at all, but still based on some 2013 method of accounting, they are putting ESOP expenditure in the profit and loss account, then it is debited to profit and loss account and credited to reserve, and there is no outflow or anything like that. So that's why number of companies are adjusting this adjusted net profit. On adjusted net profit basis, the net profit became 64.4 crore, which is a 54.5% year-on-year growth and 25.3% margin. And the cash from operation became 486 million, which is 48.6 crore, which is 66.3% of the PBT. And we paid a dividend of 1 rupee 25 paisa per share, which is in line with the last year. So strong revenue growth, strong EBITDA growth, and strong profitability, and also a strong cash flow generation. Then Q4 alone, if you take, again the total income was 79 crore, again 73.9% year-on-year growth. EBITDA 25.9 crore, which is 40.6% year-on-year growth, with a 32.8% EBITDA margin. Then EBIT 22 crore with 41.9% year-on-year and 27.8% EBIT margin. Net profit 15.8 million, which is a 46.3% year-on-year and 20% net profit margin. Adjusted net profit 18.4 crore, which is 61.3% year-on-year growth and 23.3% on margin. So that way, even the Q4 was a very good quarter, and a good improvement in performance was achieved. And what is our track record over the last 4 years? The last 4 years, the revenue from operation grew from almost 116 crore to 248.8 crore, which is a 28.8% CAGR. And this growth is driven by enterprise solution and international markets also. The EBITDA growth was 42.1% CAGR over the last 4 years. So, and the EBITDA was 36.5%. Similarly, the PAT growth also had a CAGR growth of 49.3% over the last 4 years. And coming to the other key business indicators, the revenue has been shifting more towards enterprise solutions, because as I had explained in the last call, in the trust services, the pricing little bit came down, but that got more than compensated by a further growth in the enterprise solution. So enterprise solution and overseas markets really contributed very well. And again, the revenue also was 65% in the last year. And the revenue mix, if you see, enterprise solution became almost 163.7 crore and trust services 85 crore. in the last year, while the trust service was almost flat in the last year. You can see the enterprise solution revenue grew from 98 crore to 163 crore. In geography-wise, if you see the revenue mix, so the India geography grew from 147.7 crore to 159.6 crore. But the international geographies grow from 34.9 to 89.1, it is more than double. And revenue concentration from the top 5 customer was 27% and top 10 customer was 39%. Then again, the other details of operational performance, the revenue breakup by sector, the government sector constituted 30% and the private sector constituted 48% and BFSI constituted 21%. Similarly, partner sale versus direct sale, partner sales constituted 25% and direct sales constituted 75%. Then the revenue breakup by product, cyber security product 62%. Within cyber security, we have the MCA product as well as M-Discovery product and also the eMudhra product, whereas the paperless is only the M-Signer product which constituted 38%. Then existing customer revenue versus new customer revenue, existing customer revenue constituted 72% and new customer 28%. Again, the closing order book continuously increased almost from 76.9 crore. It went up to 118 crore as of March 21, 2023. So that much of increase happened in the closing order book. Then coming to the trust services operational performance, again, strong brand positioning has been created. So people want the eMudhra digital certificate. So that's why, though we are a little bit costly, still we command the leadership position and number 1 position in the certifying authority. And more retail customers are acquired. Then our partner network, instead of a top 40-50 partner, we have broad-based the partner network so that we go to even the smallest of the partners. And another thing is last year the new areas such as e-sign, SSL certificate, they have also improved considerably. So if you see FY22 to FY23, in FY22, 72% of the trust service revenue came through the channel partners and 28% came through retail. But in FY23, 35% came through retail and 48% only came through channel partners and 17% came through the new products like e-sign and SSL. So that way, the relevance of the channel is gradually declining, and our new model enables us to go direct to many new and smaller channel partners to improve our sales, and also it gives us more flexibility to directly approach retail. So that way, the new model is stabilizing over the last 3 months, and it is giving good results. And then the number of users, if you see, the retail users increased from 191,000 to 249,000. So there's a good jump there. Similarly, the number of DSC issued increased from 2.43 million to 2.94 million. And coming to the return ratios, again, return on equity, because the equity base, because you know that in June we made the IPO. The IPO increased the capital base considerably. So because of the increase in the capital base, the return on equity reduced to 22.4%, and the equity is not fully deployed and has not come up to the optimal level. So over the next 2 to 3 years, it will come back to the original position and may further go also. Similarly, return on capital employed also, because of the high equity injection in the current year, which is not fully utilized, that's why it has a little bit come down, so it will go up. Then coming to the trade receivable, the collection days increased from 80 to 95, but again, this is one due to the growth, second due to the larger and larger projects which we are doing in the government and the public sector, where the collection time takes more time. So in spite of it, the growth is only from 80 to 95 days, which is recoverable. And out of this 95 days recoverable, almost more than 50% is within 30 days itself. So that way, the recoverability is quite good. And coming to the consolidated profit and loss account, Saji will explain about the consolidated profit and loss account and balance sheet and cash flow.
Yeah. Thank you, sir. So the revenue from operation for this current financial year, which is grew by year-on-year basis by 36.2% to 2,488 million, and with a CAGR of 28.8%. The total income, again, 38.3% of year-on-year growth, with a CAGR of 29.6%. The other expenses, total operating expense stood at 1,614 million as against 1,156 in the previous year, which is segregated again across operating, purchases, inventory, and employee benefit expenses and other expenses. The EBITDA grew from 681 million to 926 million, which is about 36% of year-on-year growth, and with a CAGR of 42.1%. Margin level is 36.5% for the year ended March 2023. The EBIT level has grew from 550 million to 768 million, with a year-on-year growth of 39.5%, with a CAGR of 48%. The margin level of EBIT is about 30.2% for the year ended March. And profit after taxes grew from 411 million to 612 million, which is about 48.8% on year-on-year basis, and the CAGR of about 49.2%, with a margin of 24.1%. The EPS of the company stood at 8.35 with a growth of 42.5% as compared to the previous year, and with a CAGR of 52.2%. This one is a consolidated balance sheet of the company. The total size of the total assets of the company grew from 2,591 million to 4,599 million, which is mostly segregated into tangible as well as intangible assets. Major portion is sitting in these two assets. 915 million is sitting in tangible assets, whereas 582 million sitting in our intangible assets. And we have some small portion of right use of assets of about 85 million. And assets under development is having about 472 million. These are the major things. After that, we have 672 million of trade receivables. And then we have a liquid investment of about 209 million, which is actually an overnight investment. And we have a cash and cash equivalent of 984 million. And then other assets all totaling to 4,599 million. The liability side, the major liabilities are borrowings these are internal borrowings, not outside borrowings, 157 million. And then we have a lease liability of 97 million. Then trade payables of about 182 million. And then other current as well as non-current liabilities put together about 240 million. The total liabilities are 675 million as against 1,050 million in the previous year. So the net assets stood at 3,924 million, which is again represented by the equity share capital of 375 million and other equity of 3,541 million. And then we have a small portion of non-controlling interest, which is about 8 million, totaling to 3,924 as against 1,541 in the previous year. Coming to the consolidated statement of cash flow, so start from the profit before tax 734 as against 505 the previous year. So the net cash flow from operating activities after income tax comes to 336 million as against 216 million in the previous year. And during the year, the investing activities was about, we spent about 1,067 million as against 377 million in the previous year. And then net cash used in the financing activities is 1,275 million and 160 million in the previous year. And then we have 44 million of foreign exchange adjustments because of the consolidation. So that net increase comes to about 587 million as against 5 million in the previous year. And the opening cash and cash equivalents stood at 83 million. So total cash and cash equivalents for the year ended March 2023 comes to about 670 million. Then if you add back the fixed deposit, which is having maturity period of over the 12 months, which is about 314 million. And then we have overnight deposit of mutual funds, which is about 209 million. So total cash and cash equivalents stood at 1,193 million as against 133 million in the previous year. This I hand over to Kaushik.
Yeah, thank you, Saji. So if you look at some of the key achievements in the last year, we've implemented several major projects. This includes implementation of eMudhra for identity access management for the defense forces, a lot of the EMCA and PKI deployments across multiple countries in defense and government. Especially, we've also achieved deep penetration in banking, where the EM Signer product is used for enterprise-wide banking paperless transformation across several large banks, and domestically also for solving use cases with lending, including e-signatures and e-stamping. And also, we helped many countries put in place their first certifying authorities in the Gulf region and Latin American region. This is also giving a huge impetus in those markets to sort of further enhance our penetration. And interestingly, several new use cases in the ecosystem we were able to drive. One around IoT for a large global car manufacturer and part of several energy grids, e-passport implementation for a country in the Middle East, and also rollout of the card security. This is primarily for debit cards and credit cards for interbank payments for a central bank, and also the first of its kind mobile PKI for digital identity and secure authentication in Indonesia for a state-owned entity. Essentially, a number of projects, a number of use cases across all our products, and for several large marquee customers we were able to roll out in the last financial year. And also, this was aided significantly by a strong engagement with global IT research firms who have also consistently recognized our positioning in the market. So in Gartner, several reports now sort of mention eMudhra. Significant ones include the Market Guide for Electronic Signature, where Gartner recognizes us as a global full-service enterprise workflow vendor. Also, their Peer Insights platform rate us 4.4. This is as a result of several customers sort of voicing their opinion, and we are rated as a strong performer in the electronic signature report. And also newer set of tools around DevSecOps, which is another emerging area where security is embedded as a design principle in software development. Gartner also has mentioned us there in the PKI and certificate management category. And again, as mentioned, IDC ranks us #1 in the identity and digital trust category in India in the last year. And we were also a great place to work certified, essentially a testament to the culture that we've been trying to build in the organization. So to quickly give a glimpse of what our business is and what are the products and how they are sort of different in the market, a little of trace back to the company. We started primarily as a certifying authority in 2008, issuing digital signature certificates. But over time, put a serious focus on innovation and intellectual property development around the digital trust space. So we launched eMudhra, which was the authentication platform that was required to validate the digital signatures, which over time has been enhanced. Then as part of the whole rollout of Aadhaar and e-sign on top of that, we also launched the EM Signer product for workflow automation with e-signatures. Then we launched EMCA, which was necessitated to replace our existing vendor for identity management and issuance of certificate itself. And during that year, we also launched our global CA operations, essentially helping us go to many countries and put in place similar backbone and also issue these SSL TLS certificates for website authentication. Then we went a little deeper. We also enhanced the eMudhra capability for identity and access management. EM Signer again was verticalized for the banking industry. And finally, we launched the mSign Hub, which is our reseller portal for reselling SSL TLS certificates. So if you see, the idea really has been to focus deeply as an IP-based company in this space, which is an intersection of cybersecurity and digital transformation. And our new R&D efforts are also primarily focused on this area around IoT certificate management, remote signing, and how do we position this one-stop shop positioning in the context of this new wave of zero trust, which is never trust, always verify, and therefore identity traceability becomes a very critical component in that whole ecosystem. So again, business is categorized into two lines. One is the enterprise solutions, where we've got three sets of solutions: paperless authentication solutions, public key infrastructure, and then of course trust services, where we issue these different types of certificates. So the overall combination is of a cybersecurity and paperless transformation solution provider, but built on this foundation of digital trust, which we are trying to now scale up globally. And from an R&D team today, almost 250 plus people are there, who are all developers who are continuously developing and delivering IP. And the total employee strength is around 780 people. And we've developed very specialized skills in cybersecurity, cryptography, cloud technology, and this whole new DevSecOps. And all of the key members of the product team have been very stable with the company and have spent a very long period, almost 8+ years, And then the subordinates are also have spent considerable amount of time in the company developing significant competency that we are able to take to the market. So this is representing a slightly more granular view of the products. Of course, in the PKI, which is EMCA, we've got various flavors of the product for root, enterprise, managed PKI, and the ability to issue various types of certificates. In EMAS, again, we've got different types of authentication, single sign-on and access management. And in new and emerging areas where we are able to issue digital signature certificates even directly to the mobile phones, because some of them are fairly secure, and focus on IoT and data encryption, which is emerging as a big area. And then the new product that we've launched, which is the certificate lifecycle management called EM Discovery, which does essentially automated discovery of certificates, ability to scan, manage the whole life cycle of the certificates, and ability to provision back to the certificates, even though it's individual device and various other types of certificates. And also again cater to the area of DevSecOps, where things like Docker, Kubernetes are the new technologies that are used to sort of rapidly deploy code and software, but need to be protected and therefore require the usage of cryptographic certificates. So the first 3 products, that is 1, 2, 3, the buyer is basically the Chief Information Security Officer organization or the IT teams that sort of decide, depending on the organization structure. We're coming to 4, which is EM Signer, which is the enterprise paperless transformation product. There the buyer is a business user. There the thesis is pretty simple. Wherever paper-based signatures are used, which is of course extensive in many industries, how do you replace that with digital signature workflows so as to enable seamless completion? Here, the factors are largely aided by cost reduction, significant improvement in customer experience and efficiency, whereas the 1, 2, 3 is more a cybersecurity driven need, which is again becoming critical as a result of so many data breaches that are happening globally, and essentially therefore driving the need to protect your enterprise infrastructure. And an interesting thing is this public key infrastructure is also emerging as a very important foundation in cybersecurity for data privacy, and new areas such as post-quantum cryptography, Web 3.0, all rely on this technology as a backbone to drive security in the future as well. So again, coming to enterprise solutions, we've done a fairly detailed view of the products, the use cases, what are the differentiators. I'll of course not go through line by line, but to give you a broad glimpse, EM Signer largely used across any sector. It is sector agnostic because the idea is to replace paper-based signatures with digital signatures. But every industry has its own set of nuances, and the product is getting sort of better and better at, for instance, we've verticalized the product for banking, insurance, pharma. And as we understand more use cases, we are again building deeper capabilities in those verticals. And it has got significant differentiators, the key ones being the ability to leverage identity-backed digital signatures. In India, essentially, we ride on Aadhaar as a digital identity. Several countries essentially are building similar programs. It's verticalized for specific industries, as I said. And again, we do private cloud and on-prem deployments because many of the regulated industries want data protection and data control, and therefore we cater to that. And we essentially have dealt with several large customers in the banking, in e-commerce, in IT outsourcing. Both TCS and Infosys happen to be customers. And essentially the competition here includes DocuSign and Adobe Sign when we talk about the global markets. Coming to EMCA, it is basically a software that allows you to issue the certificate, but has a lot of critical security guideline compliances and global standards that it needs to adhere to. And therefore it meets those demands. And from a use case perspective, a lot of use cases, both for government CA as well as private CA setups in many countries, e-passport implementations, new emerging areas of IoT related device certificates. But what is really driving the growth for this product is many enterprises want to use certificates for securing their infrastructure and authentication. So every large enterprise over time, if they are looking at leveraging cryptographic identities and cryptographic certificates to authenticate, they will also put in place this software so that they can control and own that whole sort of solution to issue certificates. From a differentiation standpoint, it's VAL4 Plus certified by the Cybersecurity Agency. This is the highest product security certification a product can get in this space. And we also support multiple types of PKI deployment models. And we have a strong support and in-house implementation team. Again, from a customer perspective, several large customers across sectors, but primarily in government, banking, and IoT. And competition here largely includes companies such as Entrust, Nexus, and PrimeKey. Entrust is our Nexus and PrimeKey are from Europe. On eMudhra is a multi-factor authentication, identity, access management, and single sign-on solution. Essentially, by putting this in any enterprise, it allows them to secure their authentication. So today, many enterprises are still reliant on password-based authentication, and different systems force you to log in multiple times, and there is no centralized access control. eMudhra essentially solves that. It allows you to move away from passwords to far more secure forms of authentication and centralize the whole sign-in and login process across different applications. It's implemented at scale. In India, critical e-government platforms rely on eMudhra for digital signature authentication. We also have completed large-scale implementations in defense, banking, and smart cities for the identity access management platform as well. Here again, the competition largely is basically Entrust and this other company called Micro Focus. So to summarize, the products have really matured over the last several years and have marquee reference customers and also present significant cross-sell and upsell opportunities. So once we sell one product, typically we're able to sell the other products because all are on this similar theme of digital trust and essentially moving to this paradigm of zero trust. Again, what's the market opportunity? These are numbers that are there and prepared by Frost & Sullivan as part of the prospectus document. But quickly to recap, emSigner has an 8.2 billion market opportunity in the next 5 years with a 29% CAGR. And our focus is to continue and deepen our penetration in the Indian market, expand in the other markets that we're already present. And then specifically in North America, how do we go after select segments such as tier 2 banks to basically penetrate? And from a roadmap perspective also, we have visibility over the next 12-18 months. The idea is to really develop verticalization and also expand on platform partnerships with leading ERP, CRM, and HRMS systems, and also list on cloud marketplaces such as AWS, which allows various companies to easily sort of deploy and start accessing the platform in a much more rapid manner. Coming to emCA, it's a 3.8 billion market opportunity in the next 5 years with a 15% CAGR. Here, really, there are tons of opportunities that are emerging both in the private sector, government sector, and in enterprise PKI space, where enterprises are looking at leveraging digital signature certificates for securing the infrastructure. And from a roadmap perspective, we are focused on how do we enhance the capability from an IoT certificate management standpoint. Newer sets of cryptographic algorithms also emerging in the context of this quantum computing. There are a few post-quantum crypto algorithms, so we will embed them in the software to essentially make the software even quantum ready, and also enhance the e-passport feature set, which is emerging as a big theme globally, where immigration is trying to be streamlined through these e-passport mechanisms. And last, eMudhra, it's 11.2 billion market opportunity in the next 5 years with a 14% CAGR. Our focus is to, one, while we're already strong in India, how do we take this product to other emerging markets where there's a need for PKI-based digital signature authentication, access management, and single sign-on. And from a roadmap perspective, we plan to enhance capabilities around identity governance, also embed AI so that various risk anomalies can automatically be identified in the context of authentication and essentially secure the infrastructure. So talking more specifically about EM discovery, this is becoming a need of the hour. We launched this last year. The broader theme is any enterprise environment is becoming very complex. Most of them are open, connected, multi-environment, and pretty much always on across different locations. Today, these certificates are only used to protect external facing websites, servers, VPN access, etc. But over time, many enterprises are dealing with thousands of certificates. So how do you really manage their life cycle? And this is what the product really solves. It provides a centralized dashboard where all of these certificates are listed, and you can pretty much identify when each certificate is going to expire and then automatically sort of renew it and provision back to the server. So as enterprises look at adopting more secure forms of authentication, such as digital signature certificates, this software will emerge as a critical sort of need from a cybersecurity perspective. So again, this is more a visual representation. So from any large organization, if you take a look at, they would have already provisioned thousands of certificates which could reside on servers, either on-prem or on cloud, load balancers, other network devices such as firewalls, and also on hardware security modules, or residing with various individuals in the form of individual certificates or email certificates. So this software allows you to scan all of them in a completely automated manner, request all of these certificates, and this request can again flow into either our public trust, which is mSign, which is all browser recognized certificates, or hosted kind of digital signature certificate model where we host it on the company's behalf or completely do it on-prem through EMCA as a solution. Once you get the certificate, it can go through a set of workflows where the certificates are validated for certain risk, compliance, and various other processes. And then any type of certificate can be issued, be it SSL TLS for websites, individual certificates, which most of us use, SMIME certificates, and also custom certificate profiles for IoT devices, and supports pretty much any protocol. And these certificates again be provisioned back in a completely automated manner in various types of servers or web environments or through manual or API-based deployments. So essentially, the combination of EM Discovery, our EM Sign, and EMCA offer a very powerful and comprehensive certificate lifecycle management, which we feel will emerge as a significant platform as enterprises try and move to this new paradigm of zero trust, where hopefully everything will depend on usage of cryptographic identities to secure the enterprise IT infrastructure. On trust services, again, as outlined by our chairman, the positioning has really been that of a branded player. We've been trying to significantly shift our focus to the online retail, where we are seeing continuous growth. And then we've also moved away from the earlier model of selling to master partners to a larger subset of sub-partners. And what is aiding our growth also is significant differentiation. We are the only CA to have strong in-house technology for partner management and retail. We have a fairly quick and easy onboarding and fulfillment process. We've got 24/7 direct support. And our D2C pricing, which is our retail pricing, is almost 6x to 7x of the channel pricing. And here two important things are driving the growth. So unlike other distribution, we have full visibility of the end customer because we do the KYC for them. And also we enjoy a significant Google organic ranking. We almost have 3x to 4x the next competitor in terms of Google search trends. And this is also helping us acquire customers at a much more relatively lower customer acquisition cost. And apart from the digital signature, we also do e-sign. So e-sign is another type of signature where anyone can use Aadhaar or PAN or GST to authenticate and then dynamically sign documents without the need for crypto tokens. This is largely a B2B sale to BFSI, to capital markets, to private sector and government. And this is a new segment. And again, as outlined, this is also considerably growing. Last year was really the first year where it started picking up, but will continue to grow as more and more private sector and BFSI use cases start leveraging the signatures for complete paperless transformation. Here also we have significant differentiators. We are the only e-sign vendor to offer all types of e-sign. The other competitors are only on the Aadhaar eKYC based e-sign, whereas we offer PAN, organization e-sign, bank KYC, and foreign individuals. Because many a times the mobile number is not linked to Aadhaar and therefore people are not able to use the Aadhaar eKYC. That is where the other types of e-sign also aid in quicker customer acquisition. And from a global CA perspective, again, we are the only Indian company to be able to issue these SSL TLS certificates. This journey is a significant one. It has a significant barrier to entry because almost it takes 4 or 5 years where it requires some demonstration of strong competence and operational expertise to operate the CA. But once you get it, then you are able to issue these website certificates as well as other types of certificates for securing the enterprise network. From a differentiator perspective, again, we have full in-house technology for partner management and fulfillment, fairly quick verification. And in the context of India, this huge push towards Make in India and data localization is helping us. And we've also tried to maintain attractive price points because the entire verification cost is actually from India. So just a snapshot, the senior management is all stable. The technology and corporate functions has, fairly strong leaders who've got significant experience with prior companies, includes myself, Vijay, Saji, Venu, Kiran, and Jana, all of whom have worked for a fairly long period in the company with significant prior experience as well. And from a business development standpoint, this is where we've been putting a lot of effort in terms of hiring, seasoned leadership level folks. Arvind is based for basically primarily responsible for the international business development. We've got Biju who looks at the Indian market from a business development. We also hired Pankaj, who is based out of North America and heads the region. Scott joins us recently as the SVP and Global Strategic Advisor. He has a PhD in Information Security and PKI and was with DigiCert, IdenTrust, and Digital Trust, so has a strong understanding of the PKI landscape in the developed markets. Geeta is responsible for the Indonesian market. Geeta and Mike work there to penetrate, and we are also putting a significant focus there because Indonesia as a market, again, is trying to emulate what India has tried to do over the last several years in terms of the digital infrastructure. And then Prasanna is based out of the Middle East, who's looking after the Middle East and Africa market and has extensive prior experience in the Middle East and Africa market in sort of selling enterprise IT solutions. So all in all, a fairly strong leadership team that we've tried to put in place, and we've been investing into hiring people for our global growth ambition. And the board, I will not go through this because it's the same set, but they've been continuously able to add value to our growth and our global strategy, again led by our chairman, Mr. V. Srinivas. So in terms of strategies for future growth, I think we are at an inflection point. This whole theme of zero trust is playing out pretty well. And then in that context, also paperless transformation and identity-backed e-signature workflows are playing out pretty well. So there are multiple impetus that is driving our global growth. One is, of course, a push for strong cybersecurity as a result of data going digital and the fear of data breaches. Two, climate change and essentially ESG, environmental, social governance, again, providing various opportunity for our solutions. And we've been able to position as a one-stop shop with strong platform capabilities recognized by Gartner, an extensive range of products with reach and marquee reference customers and verticalization. From a legality, quality, and security perspective, we've again got all of the quality and security accreditations, a focus on thought leadership, and strong channel partner network. So in terms of the four strategies, one area, of course, would be to continue to focus on IP development and services to cater to zero trust. Invest into geographic expansion to tap market opportunity, go after meaningful markets which are trying to significantly focus on digitalization as a theme. Focus on platform partnerships like the ones with ERP, CRM, and various other systems. And from a trust service perspective, how do we focus on new markets and how do we focus on this branded retail push? And of course, how do we penetrate the SSL TLS certificates directly and through the certificate lifecycle management platform that we have. So also what we've tried to do is we put product videos as part of the deck, so anyone can click on these product links and get a glimpse of what the product is all about. And of course, we are available anytime to answer any further clarifications you may have on the product. But with this, I think we complete the presentation. So I'm going to hand it back to the IR firm, Churchgate Partners, and maybe open it out for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Participants connected on the webcast may click on the audio question button below the media player to ask a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prashant from Whitestone Financial. Please go ahead.
Hello. Hello.
Yes, we can hear you, sir. Please go ahead.
Thank you for the opportunity. So my first question is, can you explain which product category is sold under enterprise solution and trust solution, and also give some color on typical client that you cater in each of these verticals, plus ticket size for this?
In the enterprise solution, as Kaushik explained, we have 3 products. One is the emSigner product, then the emCA product, and the eMudhra product, and the new product, eMudhra. So all these are sold under enterprise solutions category. The trust service category is typically the issuance of digital signatures for the people, then the SSL TLS certificates, and then S9 certificates. So those kind of certificates are the people that will come under the trust services. So this is the difference between the trust service and the enterprise solution. Typical customer for an enterprise solution will be predominantly you take most of the banks. Most of the banks in India use our eMudhra solution. Some of the banks have also used the emSigner solution. And almost all the big government departments use the eMudhra solution, like the VST department, income tax department, and all that. And some of the bank, which is a subsidiary of the RBI, and then the defense establishment, they use the MCA solution. Similarly, even if you take Middle East, several banks use the MCA solution, and some of the Middle East defense forces also use the MCA solution. So that way, it is all sold to the banks, government department, public sector, undertaking, and also the large private sector enterprise also, including maybe Infosys, TCS. If you see TCS, it is using MCA solution as well as MCA solution. Infosys is using MCA solution.
Okay. So what will be the average ticket size for this?
Average ticket size, very difficult to say what is the average ticket size, because it can range from, if you take MCA solution, MCA solution can typically go from a minimum of 2 crore to 5 crore also. You take it to MCA solution, it can go maybe from 40-45 lakhs to sometime 2 crore to 3 crore. So solution wise it is there. eMudhra may be around 40 lakhs to sometime up to 1 crore. And digital trust service, it is based on certificate. So each certificate may be in retail it is 1,500 rupees, in channel it is 140. So each solution has different average prices. So typically only one average price is not possible.
Understood. So my second question is, could you provide some insights into the asset under development that you recorded on the company's balance sheet, and what will be the execution period for this?
So development 3 product we undertook under our IPO. So one is the this Discovery product. Discovery product almost we have implemented, and we got the first large bank as a customer also. So now it is undergoing some refinement so that product, if only first customer itself may recover the cost of developing the product, then there may be a lot of other customers in the pipeline. Then the second product is the remote signing product. The remote signing product also, the beta version is implemented, and then almost 20-30 customers we have already got. So further refinements are going on, and mostly within 2-3 months it will be completed. The third is the IoT certificate management product, and how to put the certificate into the IoT devices. So that product we have started now. Maybe within another 6 months that should also be completed. So all these will be completed before September.
Okay. So my last question is, if I purchase DSC from you after expiry, do I need to renew it from you only, or I can renew it from other CA? And what will be the realization for renewal of DSC?
No, renewal, original issuance and renewal is same as far as the process is concerned, because this is controlled by the Controller of Certifying Authority. There is no compulsion it should be renewed from us. It can be renewed from the other CA also. Similarly, the other CA issued certificate can be renewed from us also. But we make all efforts to see how the person whose certificate is expiring renews with us, because we will continuously contact them 1 month before, 20 days before, 15 days before, like this, to make them to convert into a new customer.
Thank you, sir.
Thank you.
Thank you. A reminder to our participants, please press star and 1 to ask a question. Also, participants connected on the webcast, you may click on the audio question button below the media player to ask a question. Thank you. We take the next question, that is from the line of Vivek Sethia from HDFC Securities. Please go ahead.
Hi, sir. Congratulations on a good set of numbers. So my question was pertaining to the trust services segment. The first question is, like, what is the revenue from channel partners in the fourth quarter? And if you could give the channel partner count as well, like how many channel partners were there as of Q4?
You see, little bit I will explain the model. Earlier what was happening, we had almost 1 lakh channel partners. But out of that, 40-50 partners are large and others are small. So almost 70-80% of the business was done by this large partner, who in turn was selling to small partner, and then they were selling to the retail. We were also directly selling to the retail. The large partners is what was commanding lot of thing on us, and then say, you should not approach the second level, you should not approach the retail and all that. So that's why in January we changed the model. So with the change in model, what we have done is we are not selling to the large partners, we are directly selling to small partners. So at least that 20-30% price preference we get. And the other thing is because of this small partners cannot command us, we are also aggressively going into the retail. Earlier, any customer who has come through this partner network, we won't directly go, but we are now directly doing that. So because of that, this improvement is there. Otherwise, the total number of partners, it is almost the same or slightly between maybe everyone can take many partners added from a small partner. Then the business side, if you see the last quarter again, it has considerably almost that even whenever we were selling through the large partner, whatever was there, almost 6 lakh certificates, 7 lakh certificates per month, that level of certificates, we are now also able to sell directly through the small partner and also through the retail. So that way, it has not come down, but exact number of what is the amount in the last quarter alone, I am not able to recollect. Later on, I will answer.
The second question would be if you could help me with the breakup of eSign and SSL revenues within trust services.
Yeah, eSign and SSL, yeah, you have the break.
eSign was about 5 crores and all.
Yeah.
And then
almost 16% of this 85 crore has come from the eSign and SSL. So 16% of 85 crore means almost 12-13 crore. On that 5 crore may be SSL, eSign, and the balance is SSL.
Okay. And going forward, how do you expect this share to change between channel partners, retail, and between DSC and new products?
Retail will considerably increase because if you see this year itself from 72% channel partner, it has come to 48% channel partner. Next year, what will happen is this channel partner may remain at the same level because I don't think the prices may increase in the next year because still a lot of competing people are there. So the increase of, if on the total trust services, we clock the 85 crore revenue. If you assume a 15-20% growth, the growth has to happen predominantly in the retail, SSL, and the eSign. And the channel partner revenue in absolute term may remain the same as per the current year.
Okay. And if you could give like how many eSigns and SSLs were sold in FY23?
That way it won't make any, because in eSign there is a version 2 eSign and version 3 eSign. In the version 2 eSign is the Aadhaar-based eSign, where there are two models. One is the people taking yearly subscription of 500 to 1,000 rupees, then making unlimited signatures. Then the second model is per signature coming through organization and signing per signature 5 rupees also. So both models are there. Similarly, in the other V3 model, again, some of the government departments are taking per user model and per sign model. And wherever they are per user model, how many times they signed that way, we do not have the count of that and calculate in that way. So that's why both the models are there. So it is not.
So what would be the validity?
We are only one model.
Sorry, please continue.
Yeah, that's why this, like conventional signature, we cannot make that this is the only model where we sell 23 lakh into 223 rupees will be like that. This way calculating is a little difficult in eSign because both the models are.
Okay. And in both cases, like, is the validity of eSign the same or it differs?
No, if they take a 1 year, validity of eSign is same, but the subscription plan is a 1 year subscription plan, then in infinite number of signatures they can sign. But if they are opting for a one-time signature for 5 rupees, that 5 rupees is valid for one signature. Next time they sign again, they have to pay the 5 rupees.
Okay, got it. Thank you so much.
Thank you. The next question is from Saurabh Thadani from IIFL. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations on a good set of numbers, particularly on the enterprise side. My first question is on the enterprise solutions. Could you give us an idea in terms of the proportion of the order book split by either products as well as geographies, particularly towards the newer geographies like Europe and US?
No, that way we don't track from the total order book to revenue, what conversion happened, that's what we track. So if you see conventionally last 3 years, compared to the opening order book, we have achieved 2 or a little more than 2 times revenue on the opening order book. So that's why this year, if we have given a slide on slide number 12, if you see the total opening order book on March 31, that is the closing order book of March 31, which is the opening for April 1. Has increased from 76.9 crore to 118 crore. So based on the past year thumb rule, this enables us to almost achieve a 2 times revenue on this, which is only on the enterprise plus the trust services segment. And if you see internationally, the growth has also been very good. If you see the global growth, last year we achieved almost 140% growth in the international revenue, enterprise services growth, and in the Indian enterprise growth almost 26%. So similarly, the order book is also coming both from international market and domestic market, but we do not maintain a split on this.
Got that. And my second question is on the cost side. This quarter, operating expenses seems to have gone up, impacting our margins. Could you just tell us the nature of these expenses and what is the outlook for the same going forward?
In the quarter alone, there are 2 things. One is year as a whole and the quarter alone. If you see this quarter alone, only the gross margin has come down by 2% because a little more of the hardware in the overall composition of the revenue. Because when you go to many larger enterprises like public sector, bank, government and all that, sometimes for a single point responsibility purpose, they want us to supply the HSM and supply the specific hardware relating to cryptography, so that we take a single point responsibility. So if that component little bit becomes more, gross margin little bit comes down, because on the hardware reselling we may have only 15-20% margin unlike the software. So that's how in the last quarter 2% the gross margin has come down. Then coming to the PAT itself, if you see in the last quarter the stock option expenses also. If you see realistically, we have completely transferred the employee stock option shares to the trust. There is no further issue, nothing is there. But based on some accounting methodology, even though entire share is transferred to the trust, there is no dilution at all. They are accounting some stock option expenses, which is given in the current year. We gave in the 3rd quarter, so that is accounted in the 4th quarter. Around 2 crore or 2.5 crore impact is coming on the 4th quarter alone. And that kind of impact will not repeat in each quarter. Because of that, that is debited to the profit and loss account and directly credited to the reserve. There is actually no outflow. That's why we have put the adjusted PAT also. So due to this, the PAT margin in the last quarter also has come down. That is not the regular feature. So regular feature wise, we think we may be able to maintain the PAT margin around 23 to 25%.
Got it. That's it from my side. Thank you.
Yeah.
Thank you. Reminder to our participants, please enter star and 1 to ask a question. Also, participants connected on the webcast, you click on the audio question button below the media player to ask a question. Thank you. The next question is from the line of Subesha Jain from ANS Wealth. Please go ahead.
Hi, sir. Thank you for giving this opportunity. Sir, am I audible?
Yes.
Yes.
So I wanted to understand first, what percentage of our revenue is, repeat business in each of the verticals?
Yeah, if you see the trust service business, it is almost repeat business because the same customer every 2 years they will buy the digital signature certificate. Similarly, the e-sign and SSL also repeat business. Then in the enterprise business, there are 2 models. One is the SaaS model and the other is the on-premise model. So the on-premise model, again, the thing is while the full license may not repeat, but the other services associated with that will repeat, and then the AMC of 20% will repeat. So with all these things, we have calculated what can be the repeat business and what can be the one-time business. So almost it comes to 65% of the overall business becomes a repeat business, and 35% becomes a non-repeat business as of now.
Understood.
Which over time can further increase.
Okay. Okay. And so what is our current order book and what will be the execution period? And if you could give me a split of this order book between, government, BFSI, and private players, and also how much of it is on the enterprise side and how much of it is on the trust service side?
For trust service, there is no order book because whenever needed, they buy the digital signature certificate. So there is no order book on the trust service. Entire order book is only on the enterprise side. So we had a total order book of, like I explained earlier, 118 crore. And generally, our implementation cycle is 3 to 6 months maximum. And generally, the revenue of every year is almost little over 2 times the opening order book position. So that's how we have fared in the last 3 years. So that's why if 118 crore is there, fairly we could estimate the revenue would be from the enterprise segment alone around 238 crore or 236 crore like that, which will be based on the past 3 years performance. Then the trust service revenue will be over top of that.
Understood. And so from this, could you give a split between government and the private players and BFSI?
In the order book, I don't readily have it. Maybe later on we can send it to you.
Okay. No problem, sir. Sir, and I wanted to understand, in the trust service, we do e-sign and we do SSL certificates, right? So e-sign means what? We issue that DSC that, we have it, or it is directly Aadhaar based. So we also issue DSCs, right?
No, DSC we are not classifying as e-sign. DSC what we are classifying is what is the digital signature certificate issued in a token. Predominantly for all the government use cases, if you see company law board, income tax, GST, everywhere people buy a token and the digital signature is in the token and they repeatedly use that token to sign whatever needed. That is the DSC. E-sign is without the token. Reply whenever they need to sign, they can get a e-sign. And at the time, there are 2 models in it. One is version 2. Every time you sign, at the time you validate your Aadhaar, we fetch your identity from the Aadhaar, and on that we issue the 2048 private key, public key pair. With that pair, you sign a document, and with that, the signature is over. That is one model. Another model is you permanently take a e-sign account with us by through Aadhaar or through PAN or through any other. So you create the account, and once the account is created, every time you sign, at the time, every time we need not again connect to Aadhaar. We can directly use our own whatever identity we have verified. Based on that identity, we can also secure with the cryptography and issue the e-signature. So this is what we call e-sign, and not the conventional digital signature. Which is
we don't issue the tokens at all, right? We are not into that.
E-sign, no. In digital signature, we issue token also. But it is not mandatory that every signature person should buy a token from us. He may have token from other source, or he may have the old token into which he may download. All these are possible. But in e-sign, no token at all is needed. Directly he is signing on the document. That's all. No token.
Okay. So that digital signature is also a part of trust service, or it's a part of enterprise?
Yes. No. Digital signature is part of trust service. E-sign is also part of trust service. SSL is issued to secure websites. That's also part of trust service.
Understood. And sir, in the slide number 13 of the presentation, I think where you said you changed the model, from partners to retail, right? So that is on the that is the token business, or that is the e-sign?
No, token model. Token based digital signature.
Okay. So, and you also mentioned, sir, that that 5x or 6x is what we now give we charge to the retail, right?
Yes. That is also token based digital signature, because still predominant application accept only token based digital signature, not the e-signature.
Okay. So then what happened to those 40? Sorry. So just wanted to understand in this. So then, because we've moved now, we are not doing the large partners. Okay. We are going to small partners, and then we are aggressively building up our retail side. So technically, it means that we have lost 40 to 50,000 of large partners, right, out of the 1 lakh partners that we have.
1,000, 40 people, 40 to 50 people.
40 to
They in bulk. Signature.
Okay.
Signature, right.
Okay. And so for the channel partner and the retail, can you give me the realization for the DSC, the token?
The token is separate. The realization in DSC, which was almost 225 to 250 rupees 1.5 year back, came down to almost 140 rupees, almost 30-35% reduction in the last year because of 4 or 5 new competitors coming and all that. Whereas the same 140 rupees in retail will realize almost upwards of 1,500 rupees.
So sorry, 140 will realize upwards of how much?
1,500, 1,500. That's why it is almost more than 10 times realized.
Right. Okay, so earlier we were charging 140 rupees to the channel partners. Now when we are giving it to retail, we are charging 1,500 rupees.
Yeah. But the whole thing is now gradually we have to shift our focus. Earlier, if you see last year, this DSC business was 50% and the enterprise business was 50%. This year already DSC business has to 35%. The enterprise business has come to 65%. Within DSC business, already this channel business has come to 15% out of total business. So next year, the way it is going, the channel business may be hardly 10% of our total business.
Okay.
So even from an analyst or investor perspective, all of your focus should be more on the enterprise business and the retail business than on the channel business.
Right.
It is becoming almost irrelevant.
Yeah. No, so sorry, these are just basic questions because I am attending the call for the first time. I just started tracking the company, so I'm sorry about it. Okay, sir. That was all from my side. Thank you.
Thank you.
Thank you. The next question is on the line of Amit Chandra from HDFC Securities. Please go ahead.
Yes, sir. Thanks for the opportunity. So my question is on the enterprise solution. So as you mentioned that based on the current order book, the visibility of revenue is around 2x, which gives around 45% growth for the next year. So within enterprise solution, in terms of the portfolio what we have, if you can explain which part of the portfolio is contributing to this growth, and in terms of evolution of the product, where all these products are in terms of evolution, maybe from emSigner, emCA, and eMudhra, right? And in terms of driving the growth, which of these products will drive growth for the future?
emSigner and emCA will drive the big growth. eMudhra may drive a smaller growth, but really emSigner, lot more customers are coming. Even in USA, we have got the customers. Several large customers are evaluating the emSigner, so that way we have a very high degree of confidence on good growth of emSigner. Similarly, emCA again, several establishments are coming, and then the private PK is becoming a very big thing. And then this zero trust game, everybody has to put this PK infrastructure and then the CA infrastructure, so there is a lot of that. So these two products and also the mDiscovery. The mDiscovery, first we have sold to the very large bank in India. So now RBI has also made a guideline that the large public sector bank and private sector banks should have such a product to identify and discover all the certificates and renew it on time. More and more RFPs will be coming. So that's also a good product. That is part of when we broadly classify, we classify that also under MCA. So emSigner and emCA will have very good scope. eMudhra will have reasonable scope.
Okay, and sir, in terms of the contribution to revenues presently, what would be the contribution of emSigner? Because as per my understanding, emSigner would be the bulk of enterprise solutions.
Yeah, emSigner will be 33 to 40% will be emSigner. Similarly, 30-35% can be or little more. 35 to 40% could be MCA also. Then 20%, 25% can be eMudhra.
Okay. And then also in this enterprise solution, how important is the reselling partnership? Because what you have shown in this slide is that we have a very strong reselling partnership ecosystem, So how important is this partnership, and within these partners with whom we are like working the most?
The thing is, the big partner taking our product always adds to the credibility. If Infosys is taking our product, or TCS is taking our product, or in Middle East, Rakmi are taking our product, it immediately establishes credibility and enables us to penetrate new market. Otherwise, going on our own, once in an established market, our own brand will be big, so we will be able to go. So that's why the reseller partnerships are very important, and they add to our credibility, enable us to quickly complete the sale process.
Okay. So, what part of the order book would be through these reselling partnerships, and like what part would be through our own sales channel?
Last year, 25% is through partner and 75% through retail. But when we grow more and more, we should also more and more should happen through partner. So then only it is easier to grow more.
So I'm talking about
that's why we are doing to the partners and all that.
Okay. No, so obviously, enterprise business is the focus area, and we are seeing very strong growth there. So, are we comfortable in terms of driving this high growth for the next like few years, or we see increased competition because there are like big players who are present and competing in emSigner. So, can you please highlight in terms of competition how you're seeing that?
Competition is there, but we have built a lot of differentiators like Kaushik explained. Maybe later on, if you are able to go through the slide, you will understand all the differentiators. And against the big competition, we are able to win several customers due to this differentiator which we have built. So always we are analyzing the competition. So even for example, our MCA product, eMudhra product, we are continuously analyzing against DocuSign and Adobe and other platform, and then see how do we make it superior, how do we build extra features. Similarly, if we take a mDiscovery product or MCA product, we continuously analyze against DigiCert and other global sign and those kind of products and see how do we improve our product. So that way we are continuously doing. So that's why we have confidence that the growth momentum can continue for at least a future few years.
Okay. And sir, another one last question on the trust services. Since we are shifting from from a partnership model to a retail model kind of a thing. So, is this shift going to impact margins, because selling directly to retail requires in-house sales team, and is it fair to assume that selling through retail will have a lower margin versus through resellers? So this is for trust services.
Retail will have much higher margin because you are selling at 140 rupees, you are selling at 1500 rupees. And we have been doing this for last 4 years. So almost in 4 years we were zero. And from zero we have come to almost to 30 crore in retail business. And then it is continuously increasing. So whatever number of people you put, it cannot cost so much in India. So that way it will be definitely more profitable compared to the channel. And it is not new to us also. We have continuously demonstrated the increase over time. And that increase is continuing day by day, and month by month we are able to infer how we are able to increase the retail. So that way it won't affect the margin. It will, if at all, it will improve the margin, not decrease the margin.
Okay, so thank you, and all the best for the future.
Thank you.
Thank you. The next question is from the line of Kripa Desai from Electrum Capital. Please go ahead.
Hello. 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 Am I audible? Hello. Hello.
Ma'am, you are audible. You may please go ahead, ma'am.
Okay. Firstly, congratulations, sir, for the good set of results. So my question was, I see that TCS and Infosys also provides IAM solutions, that is Identity and Access Management solutions. So are they competitors in this vertical, or do they resell these products? Like do they outsource these products to you? So are they reseller partners in this? That was my question.
No, if you take IAM, Identity and Access Management solution, there are various varieties. One can be a single with only password, one can be some other factor of authentication. So we have created a comprehensive product with almost 15 factors of authentication, including digital signature, e-signature-based authentication. So some of the products, they don't have this capability. That's why if you see most of the large government applications, NCA, then the income tax, GST everywhere, and also large banks, they use our eMudhra product so that they can also cover the digital signature data. So how many factors you provide and how flexible your product, accordingly, depending on the need, people will take it. They only need authentication of simple user ID password, then they not need our product. But if they need several factors, simultaneously 2 factors, 3 factors, then they may use our product.
Okay, understood, sir.
Thank you. The next question is from the line of Subesha Jain as a follow-up question from ANS Wealth. Please go ahead.
So thank you. So I just have 2 follow-ups. So on the enterprise side, I wanted to understand that we sell through channel partners, right? There also, right? We have partner model and retail model there.
No, that partnership is different from the digital signature channel.
Yeah, so that's what I wanted to understand.
Digital signature channel partner, they buy and resell. They just buy and resell. Whereas these partners are 2 types of partner. One is the product partnership and the reselling partnership. In reselling partnership, again, through system integration partnership and again simple reselling partnership, 2 types are there. System integration partnership, for example, people like Infosys or TCS, they take a large project. In that large project, this authentication, identity management, and cryptography is a part of that large project. This portion alone, they will outsource for. So this is one kind of partnership. Second kind of partnership is, for example, you take people like Ratnias in the Middle East. So any bank wants a cryptographic related some project implementation or paperless transformation related project implementation. That itself is a project, not it is a part of the project. So this reselling partner will source the project first, then we will interact with the end customer, we will pay the commission to the reselling partner, and then we will implement. So this is another. Third is the product partnership, like the SAP Salesforce exit. So in the product itself, our solution is embedded. So directly through the product, it can also be used and some revenue will flow. So these are the various kind of partnerships. In that, now we have become strong system integration partner and reseller partner. The product partnerships need to be strengthened a lot in the coming year.
Okay. And direct sales also we do, right? So that is, how do we do our direct sales in business enterprise model?
Yes, 78% of sales is direct sales. No? So we have a large number of people. So for example, in India itself, we have 35 feet on street sale and almost another 60 inside sales people. Similarly, if you take Middle East, we have 10 sales people. Indonesia, 4 or 5 sales people. In America, we have 4 or 5 sales people.
Okay.
So everywhere we have sales people, back to the inside sales people.
So margin could be higher in direct sales as compared to partner models?
Because the partner commission will be lower, but sometimes the partner model also may give higher because if we make a system integration partner as part of a large project he builds and then one portion is outsourced to us, that portion may not be very significant to influence him on the large project. So there the margin is for us higher also.
Okay. And so this last question, what type of new products, that we are looking to launch in next couple of years, if you could throw some light on it?
All around cryptography and digital transformation only. So earlier we had 3 products. One is the discovery and then the remote signing product and IoT product. So these are still discovery plans. Remote signing is part. and IoT will be launched in another 6 months. After that, anything we take up, it will be around this 3 months, around the zero trust 3 months, unrelated area.
Understood. Okay, sir. Thank you so much.
Thank you. Next question is from the line of Faisal Hama from HG Hava and Company. Please go ahead.
Hello.
Yes, Faisal, please go ahead. We can hear you.
Can you hear me?
Yes, we can hear you.
Yeah. So, on the cash flow page in our presentation, there is a investment in intangibles and also an investment in tangibles. Can you just explain where we have made these investments? That is one. Second question is, what is our R&D spend that we are targeting for the coming financial year? And would it be a fair assumption to make that we would be growing this business like at a CAGR of 18 to 20% for the next 4 to 5 years with respect to the revenues?
Yeah, one by one I will go into the question. For example, if you see the gross addition this year, net addition is 48 crores. So because you have to consider the actual amount and the working capital also. And the gross addition is 62 crores. But in the 62 crores, predominantly the data center itself was 34 crores. Data center, inside the data center, the computing infrastructure, which was also put in our IPO prospectus as almost 31 crores, so no major overrun in it. Then the product development, we had initially 15 crores in the IPO. On that, we have already spent 10.5 crores. So these two itself has gone to almost to 45, 46 crores. And after that, because we have added number of people, we had to expand one more floor in our building. The entire interior, everything had to be done. So that was another 5 crores. Additional floor in the building. Then the data center, other than the computing infrastructure, building and the electrical was around 5 crores. Then the other product development, generally what we spent on the intangibles around 5 crores per year. On the general product development, on that we spent 6 crores. So most of the product development and capital expenditure this year has gone towards our project change will be IP. So this is where it is. And what was your second question?
Second question is, what is the R&D spend that we generally make in the previous years, and what is the R&D spend that we target for year 23-24? You can even give it as a percentage of revenues. Hello? Hello?
Any more question?
आपण ज्या व्यक्तीशी बोलत आहात त्यांनी आपला कॉल होल्डवर ठेवला आहे. कृपया लाइनवर रहा. आप जिस व्यक्ति से बात कर रहे हैं.
Line on hold. Ladies and gentlemen, that would be our last question for today. I would like to hand the conference over to Mr. Venkatraman Srinivasan for closing comments. Thank you, and over to you, sir.
Thank you all for joining this Q4 and FY23 earnings presentation. We hope we have answered all your questions well, and if you have any other doubt, you can get in touch with me or with our CFO, and then we will be glad to answer your further questions. And thank you very much.
Thank you.
Thank you very much. Ladies and gentlemen, on behalf of eMudhra Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines. Thank you.